This is episode 45, and today we're going to be talking a little bit about real estate, some of the lessons that I've learned from real estate, how it applies to business, and a little insight for those of you who may be wanting to invest in real estate or get into the industry. So, first off, a little bit about my journey in real estate. Um, you know, After having some success with one of my first businesses, and starting to make some money and be able to save some money, uh, my brother and I started buying a few properties. My first property personally was a single family rental. We also bought a mixed use property, a live work, and we bought a commercial property, a nightclub. And so that was a while back, and that was when I first got into real estate investing. Now, what we ended up doing after we started buying some properties is saying, hey, we should get our real estate license ourselves, so that we can do, our own transactions and, get more into the business, have access to the different tools to be able to be a better real estate investor. And so we went ahead and got our license. We both got our real estate licenses and got into the real estate side of the business. We were teaming up with a brokerage that we didn't feel that they were doing everything how we would want to do it. So we ended up starting our own brokerage. So we started a real estate brokerage here in Florida so that we could, kind of control everything and control the process. We ended up hiring about 40 realtors underneath us, and we were off to the races with the real estate brokerage. As we started to get more into real estate, and the pandemic started to hit and interest rates started to get really low, we saw a lot of potential in the mortgage side, so we went and got our mortgage licenses. And then we're working with a company, and doing our thing on the mortgage side, and built a team of 300 loan officers on the mortgage side. And then we ended up actually branching off to start our own company. So we became a correspondent lender, not a broker, right? A level above a broker is a lender. And so we became a lender, and we ended up having 400. I think it has 400 employees right now at this time. And so that was kind of the journey in real estate, going from being an investor to getting my real estate license, to getting my mortgage license, to owning the real estate brokerage, owning the mortgage lender, and everything kind of progressed like that. Now, during this time, of course, we continued to invest in real estate. So I ended up getting, a duplex and two triplexes as rental properties as well during this time. Now, definitely being a realtor and being a loan officer, gave us a lot of insight into the real estate investing. So I'd say it definitely helps. So anybody that wants to be a real estate investor, I would recommend getting your real estate license, maybe even your mortgage license. I actually have a program where you can do that, which you can check out at foundingwithoutfunding.com. And so I would definitely recommend it to anybody who's looking to get into real estate. That way, the background of what's going on. You can even do your own transactions. You can start to do transactions from friends, because if you're going to dive all the way into the real estate market to be an investor, it's not much more knowledge to actually be the realtor, actually be the loan officer, and have that extra insight. So that was essentially my journey in real estate. Now, there's a few things to talk about when we talk about my journey in real estate. For one, it's definitely been amazing, and I've learned an incredible amount, way more than I ever thought that I would. When I was younger, when I was working in other industries, I could never imagine that I would be doing what I do and knowing what I know now about real estate. Everything from the investment side to the realtor side to the loan officer side, to being the lender and packaging loans and selling them to the secondary, and all this kind of stuff. I never would have thought that I would know. And so that's a great thing, right? To grow, to learn. I never would have thought that that would be the case. But there's a lot of lessons learned along the way, right? Just because you have the money to buy real estate and you start buying real estate does not mean that you're going to succeed. And it definitely does not mean that it's easy. There was a lot of lessons that I've learned. Yes, I've made some money on some investments, but I've also lost money on some investments. Anybody that knows me knows that I'm still dealing with a property that I lost almost $400,000 on because of repeat flooding. And I'm still dealing with that nightmare. And so while you can win big on some deals, you can also lose big on some deals. Now, for anybody looking to get a single family home as an investment property, you got to be really careful. My advice, there's a million ways to do it, but my advice would be to make sure that you have great tenants and screen them vigorously up front, and that you hire a property manager. I would never recommend managing your own properties. So if you purchase a property and it's a rental property, I would highly recommend to have a property manager because it acts as a buffer, and it's more professional. People will try to take advantage if they're like, oh, my landlord, he's a cool guy, or I can just text him and ask for text him or her and ask for a extension or whatever it is. It's good to have that professional that says, this is when the rent's due. If it's not due, this is the late fee. I'm invoicing you for it. You have to pay it, and essentially don't let them have access to you as the landlord. I would recommend. Now, some landlords like doing it themselves, and that's one thing, but I would highly recommend, at least in my experience, it was a big difference of having a property manager or trying to deal with it myself. Now, my first residential rental property, I had to evict the first tenant eventually for not paying rent. And then the reason why I sold it was just after the pandemic hit, because once the pandemic hit, my tenant stopped paying rent. And as you know, as most of you remember, at that time you couldn't, evict people. And so, there was a time period of months and months where they did not pay their rent, and they basically didn't have to. And so I ended up selling the property, but obviously not getting what I wanted for the property. There were a large number of months where that tenant that I evicted didn't pay. There were a large number of months where the person after the pandemic hit didn't pay. And, that hurts financially, especially if you have a mortgage on the property, right? Your mortgage is due every month, regardless of whether you receive the rent or not. And you got tenants not paying, then you have to go through the eviction process. That costs you money, that costs you time. And then same thing, obviously, when the pandemic hit, the person didn't even have to pay rent, legally, and there was nothing that I could legally do about it. So I ended up getting rid of that property, and then that allowed us to, buy a few other properties, right? That then we bought the, duplex, triplex, and things like that. So, essentially, my first rental property was a loss. Um, and maybe I made a little bit of money, but the absolute headache and the nightmare and having my money tied up for that long, it was definitely a loss. So maybe squeaked out a little bit of profit when it was said and done, but it definitely wasn't worth the time. It wasn't worth the resources. It wasn't worth all my capital being tied up. So my first rental property, wasn't that great of an experience. Now, moving forward to the next properties that we got were a duplex and a triplex that we turned into Airbnbs. So this is where we shifted from, single family rentals to Airbnbs and switched to multi units, right? To kind of spread out the liability a little bit, right? And so that's where we found doing multi units and putting them on Airbnb here in Fort Lauderdale was definitely a good move. And so those were getting booked pretty consistently, and you know it makes it a lot easier when you have multiple units. Sometimes people will rent the whole thing for a large family or a group, and then sometimes people will rent individual units, but it kind of spreads out your liability, and typically is going to make you booked a higher percentage of the time. So that was working. And then again, there's another triplex where I've lost a ton of money on, right? So at the end of the day, everything you know kind of evens out. Of course, there's some properties that we made a lot of money on, but again, there's losses too. So I think me in particular, more than most real estate investors, because I've had such a crazy heavy loss on this property that flooded 4 times. I have it a little bit worse than most other investors. If that didn't happen, I would be way, way up, right? But at the end of the day, real estate investing is something that can obviously build wealth. I definitely recommend the Burr method. Anybody out there that has heard of the Burr method, you know that it's a great way to build up your portfolio of properties. Burr is BRRRR, stands for buy, renovate, rent, refinance, and repeat. So you're going to buy a property, fix it up, right? You're going to renovate it. Then you're going to rent it to stabilize the rent income. Then you're going to go to the bank and refinance it and say, hey, it's the house is worth more now and it has a tenant in it paying this much. Now you can refinance it, pull out as much money as you can, probably your down payment's worth, or hopefully somewhere close to it. And then you repeat and you buy another one. You use that money to buy another one. And that's how you can build a portfolio of properties, essentially using that same initial down payment, to be able to do it again and again and again. As long as you go through that process of, after you buy it, you renovate it to make it nicer, you rent it so it rents for a higher price than it did before, and you go to the bank and say, hey, it's renting for a lot of money, it's nice, it's going to appraise for this much, and you refinance it, you get your money out of it, and you repeat the process. So that's essentially the best way to build a portfolio of properties, and we all know that real estate's the best way to build wealth. So I would definitely recommend that. If you haven't heard of it, the Burr method, definitely something great. BRRRR, buy, renovate, refinance, and repeat. Or excuse me, buy, renovate, rent, refinance, repeat. So that's definitely something that's a great gem. If you haven't heard of it, look it up. Usually you're typically doing these with, you're typically doing this with DSCR loans, which is our favorite loan type, right? At our mortgage company, that's what we were doing the most of. DSCR stands for debt service coverage ratio. Essentially, as long as the appraisal says the property can rent for as much as the mortgage is going to cost you, you can purchase the property. No income, no tax returns, no job history, none of that. It's just based on the rent of the property. If it can cover the mortgage and you can put down 15 to 20%, then you can buy that property, as long as you're purchasing it as a rental property. So DSCR, another great thing to look up. So typically people will use DSCR loans to purchase properties and do the Burr method, and then keep repeating, especially because there's no limits to how many you can have. And all that kind of good stuff. Like if you were doing conventional or FHA, VA, and things like that, there's all kinds of limits. But this is a business purpose loan, DSCR. There's essentially no rules. Now, of course, you're going to pay a higher interest than a conventional loan, but it's absolutely worth it. So DSCR loans, use the Burr method and buy properties with DSCR loans, and you can definitely build a large portfolio. Just remember that it's not easy, right? Buying them, that's the easy part. Renovating them, not so easy, especially if you're in an area that has issues with contractors, like South Florida here. Big issue with contractors, getting good contractors to do good work, getting contractors that are available. Even getting a quote sometimes is extremely difficult from contractors. So, renovate sounds easier than it is. Rent is pretty easy. Once you've bought it, you've renovated it. Renting it is pretty simple. You just want to get the highest price that you can. And then refinancing, as long as you've done that process properly, you should have some equity there. You should have some room to refi, pull a good amount of money out, and then repeat. So I'd recommend that for anybody looking to get into real estate investing. Real estate investing is a lot like business, right? So this podcast, we're typically talking about starting businesses. Of course, owning a rental property company is a business. And there's all the same things in business as far as like the mistakes, right? I've made a ton of mistakes in real estate. To tell you the truth, the worst property that I bought was the commercial property, right? The nightclub. That was the worst property that we've bought. Well, I take that back. Obviously, the triplex where I lost a lot of the money, but a clear mistake. The triplex that I lost all this money on, it flooded 4 times. Wasn't necessarily my mistake. An inspection wouldn't reveal that. There was nothing that I necessarily did wrong. It's just bad luck. The transaction where I really did something wrong was purchasing the commercial property. purchasing the nightclub on Miami Beach. Extremely difficult business, owning a nightclub, opening a nightclub, extremely difficult business, owning a building and having somebody rent it from you to make a nightclub, because it's hard for them to do business, because owning a club is one of the most difficult things. Same thing with like owning a restaurant, any food and bev service industry, extremely difficult. So being the landlord, not only were we the landlord and owner of the building, at one point we were running the nightclub inside of it. And then at other times, we're trying to rent it to other people. And either way, it's extremely difficult. And, you know, something that was just a wrong decision on our part. It's something that we wanted to do, something that we are excited about doing, probably too excited about it because we weren't really thinking, rationally when we were making that decision, obviously. And it came back to bite us. So I would say make sure when you're investing in real estate, you're keeping your emotions out of it, because we had other businesses that we wanted to kind of integrate into it. And we said, oh, this would be good if we had this nightclub, and we built a recording studio in it, which we did build a recording studio on the second floor, and we could put this office in the office space that's there for our other company. And, this goes along with it. Plus, it'd be really cool to own a nightclub on Miami Beach, right? I was, 27 at the time. And so, we let some of our emotion and some of the other benefits that we thought we would get, cloud our judgment. And so the most important thing I think with real estate investing is waiting for the right deal. And I've read all kinds of books from real estate investors and all that kind of stuff, and they essentially all say the same thing, right? It's when we jump the gun because we're trying to get in the game quickly, and we say, I just want a deal, any deal. Or maybe it's a deal where you're emotionally involved and attached, like we were when we bought that commercial building for $1.62 million. Bad decision, right? Huge price tag, tons of money tied up in it, tons of work tied up in it, and ended up losing a lot on it. And so be very careful when you're buying commercial. It's a lot more difficult to rent commercial spaces than it is to rent a house, right? There's always somebody lined up to rent a house. A commercial building, extremely difficult to find tenants and can take a very long time. And then once you get a tenant, you typically have to give them a few months free for build out and all this stuff. It's a whole different thing. So be careful when you're investing in commercial real estate, and just be careful when you're investing in real estate in general to sit back and wait for the right deal. The easiest way to lose money is to jump the gun and try to force a good deal. You can't force a good deal. You got to sit back, got to do your research, which again, that's why it was great that we got a real estate license. I got my mortgage license, my real estate license, opened up a real estate brokerage, opened up a mortgage lender. Then we had all the tools at our disposal. Now, I'm not saying you need to go do that, but it would definitely help to get your real estate license or your loan originator license, so that you have the different tools and the different insight to try to find good deals. And then, as a loan officer, you have insight into all the programs that you could use to purchase that good deal or refinance something else. So definitely gives you a lot of insight. I would recommend, if you're going to really get serious about investing in real estate, get your real estate license. It's not that difficult. Get your mortgage license. It's really not difficult at all. And, that way you have some extra insight. I think that was probably the most beneficial thing we did when we were getting into real estate investing, so that we just know the ins and outs of every which way that you can lose, that you can win, what we can use to our advantage, the tools that we have access to look up deals and try to search for the right deals. Definitely made a huge difference for us. Now, another thing about real estate investing that you have to be careful with as an entrepreneur. So I know some of you are entrepreneurs like myself that also want to invest in real estate. Just like myself, you want to take some of the money that you've made from your business, and your business is successful. Now you're making money, put money in your pocket. Now you want to take that money out of your pocket and invest it into real estate to start building wealth, building a portfolio. So I know a lot of you are in the same position that I was. And something to be careful about is cash flow. Because when you're buying this real estate, you're tying up a lot of your cash. As a business owner, even if our business is doing well, a lot of the times it can go bad very quickly. And we all know you got to put your own money in all the time. When payroll is due, you need your money to personally put it in and cover payroll. I mean, I can't tell you how many countless times that's happened to me at different companies. It happens to probably 99% of entrepreneurs. At some point, you're going to have to pull more money out of your pocket than from when you started it to cover bills, cover things when they go wrong. Now, here's the problem. If you own three properties, even if you have a bunch of equity in those properties, you're like, hey, I'm doing great. I got five properties. I probably got $500,000 worth of equity there, and stuff. So you feel good, but guess what? You're running low on cash. Your business starts going bad. Got to make payroll, and you're saying, wow, I'm worth 2 million in real estate, but I don't have the 30 grand in the bank to transfer to cover payroll this month. And so I've been stuck in positions where, a good amount of money is needed and all my money is tied up in properties. And you got, four properties worth, 2+ 3+ million dollars, and you got a bunch of equity in them. And you're saying, wow, I'm worth a lot of money. I have all these assets, but have nothing in the bank to continue my business. So when you're an entrepreneur like myself and you have multiple businesses going on, and then you get into real estate and start investing in it, you have to be careful to make sure you don't tie up too much of your money. You're going to need cash flow to grow your businesses, but you're also going to need cash flow if something starts going wrong, and something always goes wrong. And so be very careful of that. It's bit me in the butt before of just putting too much cash into real estate, and then things start to go wrong, right? Maybe your tenants aren't paying rent. Now you're coming out of your pocket on the real estate side. Plus you can't make payroll at one of your businesses. Now you're coming out of pocket on that side to keep your businesses afloat. And, hopefully those don't happen at the same time, because then you're really in trouble. So trust me, you can go from being way up and having, a bunch of property and doing well, companies are doing well, then something goes wrong. Now all of a sudden you don't even have enough cash, liquid cash, to cover payroll when things go wrong. So, you got to be aware of that. Don't tie too much up into real estate. We should always keep plenty of liquid cash to be able to save our business or inject and invest money into our business when things are going well and we have an opportunity that we can jump on. So it's both things. It's growing our business, having that cash flow when the opportunity comes to put fuel on the fire. And it's also, if things go wrong, it could be a huge issue to have too much tied up in real estate. All right. So let's go ahead and get into some questions here. Remember, you can always ask us questions. You can send them to @KyleHirsche or @FoundingWithoutFunding. Feel free to DM us questions. We also stream this live on all the different platforms. So you can drop any questions you have there live, and I will answer them. Remember, if you are looking to start or grow your business, go to foundingwithoutfunding.com and you can get the book there. And if you are looking to become a loan officer, you can also join my team as a loan officer at foundingwithoutfunding.com. You can click the link that says become a loan officer. So looking to start or grow your business, foundingwithoutfunding.com, grab the book. And if you're looking to be a loan officer, go to foundingwithoutfunding.com and click the link that says become a loan officer. You can join the team and we can train you and get you closing loans. All right, so after that plug, let's get into the questions here. Question from Evan: what's the biggest real estate mistake you made that taught you the most? Yeah, I kind of just went over that, but great question there. So obviously buying the property that's cost me a few $100,000 of a loss, that was a mistake, but I would say that it wasn't a mistake that I necessarily made. It's something that couldn't come up in inspections. It's something that, was not necessarily my fault, not to cop out of the responsibility. But the point is that no one could have imagined that it was going to flood 4 times in 4 years. And so that one was definitely a lesson of, just be very careful, and the lesson of make sure you keep a lot of cash, because something could go horribly wrong on one of these properties and get you in some serious trouble. Now, to go back to what mistake I actually made that was my fault, was buying the commercial property, buying the nightclub for $1.6 million, having tons of cash tied up in it, tons of time and energy, and just taking a loss all the way around. Yes, it was fun to own a nightclub on Miami Beach for some time until it starts taking all your money. Then it's not so fun anymore, right? Trying to keep it afloat. So that was definitely my biggest mistake in real estate, was purchasing the commercial property. And also realizing, once I purchased the commercial property, if we weren't running the nightclub inside, it was extremely difficult to get tenants, right? And extremely hard to sell the property. It's not like a home where there's always tenants ready to rent and there's always people on the market ready to buy. We're talking about someone who has to want to start a business or already owns a business and wants to sign a gigantic lease and build out some place with, spend $50,000 to build it out with all the stuff that they want. I mean, we're talking about few and far between even possibilities of people who could rent that nightclub. And so that was also a wake up of, okay, we got all this cash and everything tied up in this. Let's rent it as soon as possible or sell it as soon as possible. And you realize, wow, this is difficult. The possible tenants are and possible buyers are so few and far between that you're just sitting there, right? Even us marketing it on different platforms, even running Facebook ads, trying to get people interested in it. It is extremely difficult to even get people to inquire about it because there's so many prerequisites that they have to have a business or want to start a business. They have to want to do it in the first place, the location. I mean, everything comes into play. Okay, question here from Lindsay. Do you think real estate is safer than starting a business, or is that a myth? Honestly, I'd rather start a business than be a real estate investor. I feel that you have more control when you're running a business. I feel like once you're locked into a property in real estate, if you made any kind of bad decision on getting that property, or any mistake, tied up a little too much cash or whatever it is, you're just sitting there and there's nothing you can do about it. Just like I was saying with the commercial property that we bought, you can't lower the price enough to get somebody to rent it if there's nobody to rent that exact situation that fits what they're looking to do. You can't lower the price enough for somebody to buy it because it is extremely difficult to get financing to buy a commercial property like that. If you can finance it, you're looking at least like 40% down. Most lenders would want like 50% down on a straight commercial property like that. So especially one for $1.6 million like ours was. So, you feel trapped. When you're running a business, you can always hustle your way out of it. It's one thing I love about business, and that's why I always bet on myself. I'd rather invest in my own business than invest in something else because I can bet on myself and I know that I can hustle my way out as opposed to just having to sit on your hands and do nothing when you own a property that's not moving. I mean, even with my single family home rental property, yes, it was easy to find tenants. Yes, it was way easier to sell, but there's still that period of time where it's up for sale, where you're taking offers, then you're under contract, then maybe that one falls through, you get another one under contract, and then yes, you finally sell it, finally get paid, but you needed that cash 3 months ago, 4 months ago, and then you're waiting all that time. So you got to be careful of the cash that you're tying up there. All right, question from Marcus. What surprised you the most the first time you owned property? The first time I owned property, so the first time I owned a rental property was the single family rental that I had in Biscayne Park down in Miami. And it was actually a great property in a great neighborhood. But what surprised me was the arrangement of dealing with tenants. And here's the biggest mistake that I made on my first rental property. I rented it to someone I knew, not somebody very close to me, but an acquaintance that I knew, did business with a few times, not friend or family, but somebody that I knew. And I was managing the property myself. So now you're dealing with somebody who's comfortable with you, that knows you, and feels like they can not pay for things or not pay on time and ask for extensions and all these type of things. And so that's when I realized, and I had to evict that person eventually. That's when I realized, A, don't rent to anybody you know, and B, put that buffer in between you. So there's a professional that they have to answer to. They should not have your phone number. They should have the property manager's phone number. They should be speaking to the property manager, and the property manager can stand on the rules, right? And say, look, your lease said this. If you're late 3 days, you have to start paying $50 a day or, whatever it is in your late fees, as opposed to if they're talking directly to you, they're always going to beg and plead. And especially if they know you, they're going to be like, come on, man, you can help me out. So definitely a huge mistake renting to somebody I knew, and huge mistake not having a property manager. Now the next tenant I had in there, I made sure I had a property manager, and it went a lot better. At least it did. It was going better until COVID hit, and the person didn't have to pay their rent, so they stopped paying their rent, which put me in a bad position. So I put it up for sale and ended up selling that one. Okay, question here from Brielle. We'll take this last question here. How did real estate change how you think about cash flow? Yeah, I mean, it changed everything of how I think about cash flow. I mean, I'm very careful if I were to put more money into investment properties of how much free cash flow I have, how much liquid cash I have, because of course, as I said, especially the bigger businesses you have, the more it can go crazy. I mean, we're talking about at a mortgage lender with payroll of, you know, $60,000 in a 2 week span. And if you're short on that, you might be short $30,000 on that 2 week period. And then you have the same thing coming up in 2 weeks. And so the bigger the companies get, the larger, the risk, and the larger you can go into the hole very quickly, not only as a company, but as an entrepreneur. How long can you really last when you're putting in 30 grand every 2 weeks to cover payroll, or 10 grand, 15 grand? I mean, you can go from having $1 million to having negative dollars way quicker than you think when you're trying to build a business, things aren't going great, or things start tanking. Also, when we started a mortgage lender, shortly after, rates went higher than they ever have, faster than they ever have, right? It was the quickest raise of rates because it was, correcting because of COVID and the inflation. And, we're never going to see those COVID rates again. Hopefully their rates will ease here shortly. But the point is that a business, especially the bigger business you do, it can go south quickly. Maybe it's because of a mistake you made. Maybe it's not. Maybe it's just because of the market. Maybe it's because interest rates rose faster than they ever have in history, right? So, I learned a lot from real estate. And one of the biggest things I learned was that cash flow lesson of knowing that I need cash flow. And sometimes businesses can suck up $30,000 a month from your personal savings, and you just have to make it happen. And if most of your money is tied up in properties, it can take months to get that money out, and you're left in a very bad position for your company. All right, with that being said, we will go ahead and wrap it up.